I'm Bobo and welcome to our weekly recap of Hong Kong real estate. Looking at the first half of the year, the property market has been on a roller coaster ride. Early on, the market was still sluggish from the end of 2023, with both prices and transaction volumes hitting new lows. However, in late February, the government announced a complete removal of property cooling measures, leading to a rapid surge in transactions. But transaction volumes began to decline again in April as purchasing power dwindled, banks gradually tightened mortgage requirements, and high interest rates persisted, resulting in cooling market sentiment. Despite the ups and downs, developers have been actively clearing inventory, launching new projects at lower prices, as well as offering more discounts and payment options. As a result, the new housing market performed well in the first half of the year, with nearly 9,000 first-hand transactions recorded. This is not only a 40% increase compared to the same period last year, but also the highest half-year figure in 5 years since the first half of 2019. However, with transactions slowing down again, last month's first-hand sales dropped sharply from around 4,200 in March to just over 600. With a large stockpile of unsold units still in the market, it's expected that developers will continue to offer low prices to clear their inventory in the second half of the year. In the next 6 months, more than 50 new projects comprising about 24,000 units are set to launch. Among these, Kai Tak will see at least 5 new projects debut. At the helm is the first phase of the Pavilia Forest, developed by New World and Far East, located in the former runway area. Yesterday, they opened its show flats to the media, with public viewings and pricing announcements expected later this week. The Pavilia Forest will be developed in 3 phases, offering a total of 1,305 units. The first phase, consisting of Block 5 and low-rise Block 6, includes 291 units ranging from 1 to 3 bedrooms, measuring about 270 to 560 square feet, with a strong focus on 2-bedroom units. The developer has also announced new payment options to accommodate different buyers' needs, with the initial batch of prices benchmarked against luxury waterfront projects in Kai Tak. While the first phase of the Pavilia Forest gears up for launch, smaller new projects have already started selling in July. Voeux W Residence in Sai Ying Pun put 81 units up for sale on Monday and successfully sold 65, accounting for about 80% of available units, with all 2-bedroom units sold out. To maintain sales momentum, the developer has launched a third price list, including 2 2-bedroom units and 15 1-bedroom units, totaling 17 units. With a maximum discount of 9%, furniture offers included, the discounted prices start from 5.169 million Hong Kong dollars, with an average discounted price of about 21,000 Hong Kong dollars per square foot. All units will be available for the second round of sales this Friday. Thanks to these sales, the first-time market recorded about 108 transactions over the 3-day weekend. Among them, Wang On Properties Larchwood in Mong Kok sold 7 high-floor studio and 1-bedroom units, realizing over 41 million Hong Kong dollars. Turning to the second-hand market, although the removal of cooling measures temporarily boosted transaction volumes by attracting many homebuyers and investors, the impact on property prices has been limited due to low-priced new launches. Last week, the Rating and Valuation Department announced that the private residential price index for May had ended its 2-month rise, falling by more than 1% month-on-month to 305.9. Overall, property prices have dropped by 1.73% in the first 5 months of the year. With housing prices under pressure again, many prospective buyers are now hunting for bargains in the secondary market. Over the weekend, Hong Kong's 4 biggest real estate agencies recorded 8 to 13 transactions for the city's top 10 blue-chip housing estates, with some agencies seeing their highest transaction numbers in 13 weeks. While the market's focus has returned to the secondary market, whether listings will sell depends mainly on the owner's willingness to adjust their expectations. In Taikoo Shing, the price for 1 unit had to be reduced by nearly 2 million Hong Kong dollars before it was sold. This low-floor unit measures 714 square feet in size and features 3 bedrooms. The original owner purchased the unit in 2019 for about 14 million Hong Kong dollars. It was listed in January this year at a discounted price of 12.8 million Hong Kong dollars. However, it ultimately had to be reduced by 1.97 million Hong Kong dollars to 10.83 million Hong Kong dollars to be sold, with a price per square foot of about 15,100 Hong Kong dollars. Holding the property for about 5 years, the owner booked a loss of $3.17 million, with the unit depreciating by nearly 23% during this period. In Island Resort, a high-floor 2-bedroom unit in Block 1, measuring 451 square feet with sea views, was on the market for only about 3 weeks. Initially priced at $8.2 million, it was quickly sold for $7.45 million after a significant reduction of $750,000 at about 16,500 Hong Kong dollars per square foot. According to the agent, the new buyer is a local resident who appreciated the sea views from the bedroom. The transaction price was more than 4% below the bank's valuation and about 3% lower than a similar unit sold 2 months ago. However, since the original owner purchased the unit in 2010 for 3.93 million Hong Kong dollars, they still booked a profit of $3.52 million despite the price reduction. Holding the property for 14 years, the flat appreciated by nearly 90%. For more information on the secondhand market, stay till the end of this video for this week's recap of secondhand transactions across each district. That's all for this episode. See you in the next.